Good evening, everybody, and thank you to those who are joining, will join, and for those who are watching, who will watch recorded version. My name is Brother Ali with Phoenix Local Organizing Committee, Ministry of Trade and Commerce, and we are here for tonight's class, tonight's session in the Be Ready Business Readiness Program, a program that we're very excited about. It's really, we're really focused on helping and supporting businesses, primarily Black-owned businesses in the East Lake Park area and beyond. We've all been affected in one way or another by this COVID pandemic, whether it's having to close temporarily, whether it's changing buying patterns, whether no matter what the change is, right? And so we know that we have to adapt. We know that we have to continue to maneuver and grow if we want to be successful. And we need successful businesses to have a successful, thriving community. So that's one of the reasons why this program is really important. And tonight, we're very excited to have Mr. Gus Barnes on, who will be talking to us about knowing our numbers. Something that I know I personally did not or took for granted starting my businesses out, and something that I'm paying the price for now, but also excited to learn more and more about, because in order to move from being a hobby or being a side hustle to being a real business, it's absolutely critical to know our numbers, to know our profits, our return on our investments, right, and not just fly blindly. Because ultimately the goal in business is to grow, to scale, to hire, to hopefully at one point be able to step away and have the business run without us being there every day, right? But none of that's possible if we don't know our numbers, we don't know our profit or how to analyze our business and value. So we're extremely excited for this session tonight, and hopefully people get a lot of value from it. And feel free to ask questions. Feel free to follow up if you have questions that come up later. And we're just looking forward to tonight's discussion. I'll allow Brother Gus to introduce himself and take it away from here. Thank
Hello.
you.
Hey, thank you. I appreciate being here, and thank you for the invite. My name is Gus Barnes. I'm an accountant in the Phoenix metro area. I've been studying taxes, accounting for the last 15 years or so. I do have a master's degree in accounting, and prior to that, I was a partner with a local restaurant out here, actually. But one of the things that I love doing is doing accounting. So eventually I left the restaurant business and got back in accounting. But one thing I do like to see, I love seeing small businesses grow, understand their numbers, anything that can help you all get to the next level. And I know it's sometimes it can be challenging, because a lot of times when you have a skill set or something that you enjoy doing, like cooking or building houses, you can care less about the numbers, right? You just want to make the customer, or you just want to make that cake to the best of your ability, which is what you love doing. And you care less about charging people. How much should I charge you? Oh, just give me $10, right? So just kind of like tonight, give you guys like a high level overview of just certain things to look out for when you start your business and eventually start to grow your business, and then things you might want to look out for. So what I'm going to do, I'm going to share my screen with you all. And right now you should be able to see, I have put together a PowerPoint presentation. And so what I did today, I noticed the topic was bankable. So basically, when you think of bankable, basically there's like 4 key areas that we're just going to look at right here tonight. So we have cash flow, debt services, debt schedule rather, financial statements, and then obviously federal, state, and local taxes. So no matter what type of business you have, how big, how small it is, these 4 areas are very key to your business. Like I said, a lot of times, a lot of businesses start out as hobbies. So a lot of times you don't think about the cash flow. You don't think about, debt. Probably if you had any debt, it's probably very minimal. You don't care about your financial statements, because when you're doing a hobby, you're doing it for, like it says, you're doing it for a hobby, and you're randomly collecting money for it. But eventually, something where down the line the light bulb comes on or something, and you're like, you know what, I can turn this into a business. Now you're like, well, what I need to do, what I need to know, how much should I charge? So that's kind of like where the accounting side of things come into play. Like for example, if you're in the food business, your number one priority should be your food costs. So basically, you want to know, if you make a cake, how much does this cake really costing me? And then based on that number, you can kind of project how much you should sell it for. And then that difference, obviously the cost minus the profits, would be your food cost percentage. But even though that sounds like an easy math equation, there could be a lot more stuff involved with it, because you got to worry about time, how much time did it take you, how much electric are you using, stuff like that. But to keep it like an overview, we're just going to focus on like the high level stuff. So the first area we'll look at is the cash flow. So cash flow is basically money coming in and out of your business over a period. This period can be over a month, it can be a year, it can be 6 months. When you run your business, you want to know how much revenue you brought in, and how much expenses are going out, and then that net difference is your profits. So when you break down your cash coming in and out of your business, there's three areas that you will concentrate on. So early on in business, a lot of it's based on operating. Operating is like the day-to-day activities, like your accounts receivable, your accounts payable. So if you make, like, we'll go back to the cake. So I'm making a cake. So that means if I sell the cake to somebody, that would be considered accounts payable. So my AR, they owe me money. So it's accounts receivable. If I gotta go to Fry's grocery store and purchase flour, sugar, eggs, but I'm paying cash for it, that would be my accounts payable. Or let's say if I had a credit account with Fry's, then obviously it's still accounts payable, but I'm getting those materials, that food stuff on credit. So what I'm hoping, what would happen if I do that, is that I'm hoping that I can get enough credit with Fry's. I might go out and get $100 worth of materials, flour, sugar, eggs, whatever else you need, baking soda, from Fry's, make my cake, make $100 worth of cakes, and then turn around and sell those cakes. And then in 30 days, I want to pay off Fry's their balance of the $100. Then I know in my mind, whatever I have left over is my revenue. So just to keep it kind of simple. So then when you look at investing, if you had a cake business, same thing. I go out and buy an oven. Let's say I'm starting to do a little bit more business. Oh, I need more ovens. So now you're investing in your business. So that's why they call that, if you go out and purchase real estate, you go out and purchase ovens, you got to go out and purchase a lot of equipment such as pots and pans. You got to purchase bigger refrigerators. So now you're investing in your business. And then obviously when you look at financing, that's when you go to banks and stuff and get loans. So those are the three areas of cash flow when you kind of look at the cash flow of our operations. And all businesses follow this model. So we look at our next slide. So this is just an example. So no worries, do the math, and no quiz tonight. So this is just I just got this off of Google, so we can see that on a entry amounts and then activity types. So remember how we had customers receivable, that's operating, and then we borrow loans. You can see that's financing, income tax paid, operating. Here's your plant and materials, machinery, that's investing, loans, financing, your payables to suppliers. Like if we were payable to Fry's grocery store, that's our payable to our supplier, that's operating. And then we have like real estate purchases of investing. So when you do the math on that, you add up all those numbers and stuff, they have a net cash flow like $970,000. But obviously when you're first starting out, obviously the numbers will be a lot smaller, but this just kind of give you a high level overview of how businesses operate and put the different pots of their money in different buckets. So that's all you really have to focus your operating, financing, investing. Those are the three key areas. So let me know if you guys have questions or if I'm going too fast, and then I can always slow down or just revisit something.
On your customer receivables, the operating, is that, I've always thought about that as like an amount your customer owes you, but
Yes, that is
okay, that's what that is?
Yep, exactly. Yep.
Okay. But if it's a, let's say if it's just a sale, regular income, where does that get
Yeah,
calculated?
it's still a receivable. Anytime you receive money coming in,
Okay,
and
gotcha.
yeah, and so now, great question. Now, if you really looked at it, you can have like the sales right there. Like you at a barber shop or you sell somebody a cake, you get that money right there. Sometimes you might sell a cake and they'd be like, "Can I pay you in 30 days?" So now you can run a different report to show you what outstanding receivables you have out there still. And it happens, right? It's a business. That's why you see a lot of businesses. If this is true for no matter how big or small you are, you have to set net terms. So what a net term is, hey, pay me later, but payment is due in 30 days. Or pay me later, payment is due in 10 days. Or sometimes you might see something out there, pay me 10% now
Right,
down, and then the balance due in 30 days.
right.
Or you might see something like a net 2%. So if they pay you within 30 days, they get a 2% discount if they pay you within 30 days. Okay.
I have a question for you, Gus.
Yes, go ahead.
I know sometimes when we talk about cash flow, how important cash flow is, because even though sometimes like your profit and loss may show that you have money, but you
Mhm.
may not have any money in the bank.
Right.
So how does that happen?
Yes, and great question. So on your if somebody has like QuickBooks or using it like you can do a cash basis or you can do a accrual basis. So what happens a lot of times, I've seen this many times where on your books they'll show you have a net profit of like $10,000, right? So think of it as your like your home budget. So you have a budget. You might, let's say like we budget for the whole year. So we'll say in 2021, I'm going to make $100,000, pay off all my bills, and then according to my 2021 budget, I'm going to have a net bottom line of $10,000. Okay, so let's say throughout the year, I'm paying my bills, and doing all that stuff, and then I get to December 31st, my net is $13,000 on paper, but in my bank account, I only have like $1,000 in my bank account. So that's kind of like how that works. Even though you don't see it I don't say in the physical, on paper, it still shows what you actually happen. And that's why a lot of times you'll see companies go, well, where we spend extra money at, or what happened to it? But it can go from uh, if you think about I didn't. It's on here on a couple of slides down the road, but on your financial statements, you have three areas. You have your profit and loss statement, and then you have your balance sheet, and then you have your cash flow. So what happens is your profit and loss statement. Remember how you said the question was the net profit be $10,000, but you have no money to show for it. So on your profit and loss statement, it's just your revenue minus your expenses. And that's where you'll see that $10,000 bottom line. But now, what people don't fail to realize is that if you go over to your balance sheet shows your current assets and your liabilities. So a lot of times people might go out and invest more in a piece of equipment, right? Or you might, but excuse me, or you might go out and get another loan. So now your balance sheet will show your true balances in your like your assets and your liabilities accounts. So even though you don't see it on the even though the P&L shows like a $10,000 gain for the year, if you go look at the balance sheet, then you'll see all those different assets. Like this assets like stuff you own, like your bank accounts, your cars that you might be using for businesses. Your remember we was talking about the bakery business, right? So now you might see equipment on their balance sheet, and say like the equipment's balanced at $50,000. So even though you don't see it on your P&L, you still have to record it as a net profit for that business. So good questions. Another thing also, even though you had a $10,000 balance on your net profit, it will never match your bank account. So that's why you have to understand, even though that number is there, $10,000 bottom line, this doesn't mean you naturally have to have $10,000 in the bank. But if you go look at the balance sheet, then you can see kind of like see if you do your assets and your liabilities, you can see the true value of what that company could be worth. So good question. I hope that helped you out. That was a lot. I know that's a lot of information, but like I'm hoping that the way I gave the home budget illustration, I hope that really helped. But if you think about it, like even with your paycheck, hey, I got this paycheck, but now all my money's gone, but I don't know where it went. But it says on paper, it said I should have $1,000 left over, but yet I only got $100 in the bank. So it's kind of like almost just like a business, even though you don't see where your money's going, it's actually going out the door still. But the only way you can kind of get around that, you have to get really technical, right? And just trace everything down where it's going and try to cut costs when you can. And another thing, I'm not getting off subject, but a lot of companies, what they like to do too, one of the reasons why you use a software company to track your expenses and revenue at the end of each year or maybe quarterly, you can go in and see, wow, we spent a lot of money with I'm just gonna throw a name out there. We spent a lot of money with Circle K in quarter 1. Why? Why have we spent so much money in fuel, right? And then you can start, then you can actually analyze that data, and then you can come to a conclusion. Oh wow, somebody been using the gas card for personal vehicles. Oh wait, we've been running the van for personal use. I mean, that's one of the things why even though you have your numbers, there's always reasons to review your numbers where you think something isn't right. So stuff like that helps out. And same thing with the bakery business. Remember how we said food costs in the restaurant business, food costs, labor, and paper costs are your biggest expenses. So in the bakery business, so if somebody had a restaurant, anything, restaurant or a food truck, what you do quarterly, you'll go back and review all your numbers quarterly. And you look at how much did we spend on food? What was our actual profit? How much revenue did we bring in? And then you can kind of see it, you can kind of set your prices based on those numbers. So there's a lot you can learn from numbers. And one of the big things people, you always hear people say, they'll say, oh, numbers don't lie. Well, numbers don't lie if they're in the books accurate. They'll tell you a lot of information about your company, which is pretty cool. I hope that helped you out. So I don't know if anybody have any more questions.
Oh, I have one more.
Sure.
If I go to a bank and get a loan, how does the cash flow is that even more important? Do they look at those cash flow numbers?
They do. And I'll touch on that here in a sec, but just to kind of like, actually, let me go to this next slide. So kind of like when a bank get a loan, or when somebody goes to the bank for a loan, they look at several areas. They'll look at your cash flow. So remember how we said earlier, you had 3 areas in your cash flow: operating, financing, and then we said investing, right? So now, based on your cash flow, a lot of times you see the bank ask for your balance sheet. Hey, send us your balance sheet, send us your cash flow, or sometimes they say, we don't need the P&L, right? So based on your cash flow, they can see what areas you're receiving the most of your funding from. So if, for example, if your loan balance is higher, I wish I can show you guys a report. I don't have one handy, but I'm trying to think of a way to explain this so it makes sense. So on a blank piece of paper, we had 3 categories. We got operating, financing, and investing, okay? Operating, we said, what's the day-to-day activities, right? So let's say like your day-to-day activities for a period, let's just say 3 months, is only $1,000. So now the bank's looking at that. Well, you only got $1,000 coming in your operating, but down here in your loans, you already borrow $500,000 and you want more money. But according to your operating, we don't see no money coming in, right? So that most likely they'll say, we're going to deny this loan. But yet you might go back, well, wait. If you're looking at investing, I spent $400,000 on equipment and I'm haven't opened yet. I'm trying to get my business ready to open. So, but then again, they still might say no. But then again, they might look at your previous year tax returns and see that your spouse makes $300,000 a year. Then they might say, you know what? We'll give you another $200,000. So that's why it's important to understand operating, financing, and investing on your cash flow. So a lot of banks look at that. So this screen I have up now is called debt schedule. So what this is, the bank want to know all your future obligations, like all your liabilities. Who do you owe money to? So same thing. This again, if you're doing your QuickBooks or using in like an Excel spreadsheet, you're just tracking everything, right? Just track everything, money coming in, money coming out, right? Um, they can look at that, even though it's not in a proper format. If you ever got to that point where you're not using QuickBooks and the banks want some kind of financial statements, I would suggest find like a template online and see if you can somewhat take your numbers and put it in that template to get it, make it like this, make it sort of make sense. But if not, then I would suggest using like a QuickBooks software. And the reason I always talk about QuickBooks because it's affordable. Is you can get the lower end of like $20 a month, I believe, and then you can have all your stuff in a financial software, and you can connect your bank account to it, and then it'll just pull in all your transactions automatic. So it'll save you a lot of time. But so a debt schedule is pretty much just an overview of your business current payments. So anybody your business owe money to, it helps your business stay accurate. It can help you. These some of the key points for on the far left. It can help you know forecast financial obligations. It helps you with I can't say the words for some reason. Wow, for better rates, and then bookkeeping stays accurate. So if a bank sees this, they're like, oh, you know what? This business is pretty organized. It seems like they understand what's coming in and out. They're most likely to not give you a loan, but maybe you have a better chance of receiving a loan. So, but a lot of times, keep in mind, they still will pull like 2 to 3 years of your tax return. So, especially if you're a LLC, even with I think even with a corporation, they might pull the main guy tax return. I'm not 100% sure. But a lot of times they look at your tax returns, they look at your financial statements, especially your balance sheet, your cash flow, definitely, and then your P&L. But if you have that stuff in order, you should have good reviews with your bank. On the far left, on the far right, I put on there like, if you don't like paying for like just those 4 things you can probably use. I know the Excel spreadsheet's good. Google Sheets is good if you like being on the go. You can actually use your cell phone and use it in Google Sheets, and you can put like expenses in there if you're on the go. You can also use an app. I don't know any right off, but I know there's some out there. And then obviously the cloud software. I would say this also for people that have small businesses. One of a good expense to write off is your mileage for your vehicle. So, but if you do that, you have to keep a log, either the starting like every day. If you use your car for your business, what is my auto meter telling me now, and then what's the ending total, and then write that total off to the just add up the difference so you know how many miles you drove for your business that day. The mileage rate tends to change annually. So, I think 2 years ago it's 57 cents. I think it dropped this year. I'm not 100% sure, but I think it did drop. But if you use your mileage, you cannot deduct expenses for your vehicle. But most likely when you're starting out, it's always best to use your mileage. Any questions on that? They kind of like wanted to bring that up because I know a lot of times, a lot of businesses, they don't think about that. And then a lot of times what hurts is that they don't track it. They don't track it like they should. And then at the end of the year, they're trying to remember where they drove their car to and from. But if you daily or monthly, it'll save you a lot of headaches in the end. So this right here, this is like we touched on earlier. Remember these are like the financial statements that banks will look at besides your tax return, right? So you have your profit and loss. So your profit and loss, just basically your revenue coming in. Customers give you money, right? Any form, write your checks, pay your credit cards. What else? Cash. If you take Bitcoin, good for you. But anyway, and then you minus your expenses. So expenses can be like food costs. If you're in a construction business, you might have to buy supply materials. You got, if you're working out of your house, I'll circle back to that because I want to explain some stuff on that. So, but just anything like marketing materials, you got accounts on Facebook ads, you can write all that stuff off. One thing I do want to touch on, if you use your house for your business, you have to have a dedicated room. You can't use your bedroom, like sleep in your room part-time and then have your office in there part-time. That's a no-no. So the IRS rule says you have to have a dedicated room for your business in order to have those deductions. And the way you would do that, if your house is 1,000 square feet footage, say your room is 100 square footage, then obviously it's 10%. So 10% of your electric bill, 10% of your rent or lease, 10% of your, I don't want to say phone because that's another whole area, but you get the idea behind the rent and the electric. With the phone and internet, see, now you got to base it off of hours uses, right? So there's 24 hours in a day. Okay, 24 hours a day, 4 hours a day, I'm using the internet for my business. You see how that works? Then you get a percentage. Now you can determine what percentage you get to write off for your business. So there's a lot of stuff like that for really anything. If you think about it, if you're not sure, you can always ask an accountant if you aren't sure, or sometimes QuickBooks have like what I'm looking for, like a blog online where you can ask questions and somebody answer for you. And sometimes you can always Google it, and then some good answers will come up. When you see it's a good answer when you see kind of like everybody's talking about the same thing, but always double check, all right. But stuff like that. But so those are, yeah, go ahead.
I have a question. Sorry, Gus. Good to meet you, brother. Thanks for this, man.
Oh, thank you.
Yeah. I'm pretty new in my business, so I haven't really generated any income at this point. I've been in business for about a year now.
Okay.
Almost two years technically. So trying to get a bank loan for me, I don't, just based off of what I'm hearing, and I'm taking notes and I'm doing some screenshots so I can make sure I have the information. How would someone in my position, I have an L.O.C, so it's like a sole proprietor L.O.C. A bank would even request these documents, a profit and loss statement, balance sheet, and everything from someone like me who's a sole proprietor, L.O.C.
Right. Now, two things there. So most likely they would look at more your personal taxes over the last 2 to 3 years. So they will definitely look at that. Obviously, they'll look at your credit score. Now, what you could do, you say you've been in business 2 years, almost 2 years. So if you have expenses, you can technically carry those expenses forward on your tax return. And I think you can carry it forward up to 20 years, I think. I always forget. I use it rare. And you can carry, and then on your tax return, I believe, you can deduct up to $5,000 in losses during the tax year, I believe. But
personal taxes or
just on the Schedule C. So it'd be on your Schedule C.
Okay.
And then sometimes it might say you can only deduct up to what you brought in revenue too. So it's kind of really scratchy but I can't remember if it's 5,000 for per year, so many, or you can carry it forward. I know you can carry it forward. So and I just can't remember if you can only deduct up to 5,000 based on the year's revenue. Because what would happen is people would say, oh, I got a loss 10 years in a row, right? And that way they can avoid paying taxes. But in your situation, obviously, it'll be really your personal financials that the bank will be looking for. And if you've been in business 2 years, then the IRS expects you to start being in profit in year 3, roughly. So based on businesses throughout the United States, excuse me, there's always like a pattern, right? So they know hey, you have this type of business, this is where you should be at, right? So they kind of know people that try to scam the IRS all the time, right? You see the stories on the news. So even with the bank, you can still qualify, like I said, they'll just look more at your personal finance more
Mm,
so.
okay, so get that in order.
Yeah.
All right, cool. Thanks, man.
All right.
Appreciate it.
And I know we touched a little bit earlier on, like, remember the key things in the financial statements is your profit and loss, your balance sheet, and your cash flow. So I know I touched on the profit and loss, or you might hear that's your income statement. So just remember, you can, like I said, you can create this on an Excel spreadsheet, just money coming in and my expenses, just like your home budget, paychecks coming in, bills going out, right? That's kind of like what your profit and loss statement is. Your balance sheet shows your assets. This is like, it shows the value of your company. So now your assets are stuff you own, right? I own my equipment. I own my cars for my business. I own my business, my building. I own the land my building sits on. So that's where your assets come in. I own my ovens. I own my stove, right? I have my inventory of clothes. I'm ready. If you're in a t-shirt business, I have to stockpile t-shirts because I want to be able to, if an order comes in, I want to be able to turn that order around quickly. So, but unfortunately, you have to carry inventory. I don't know if you guys remember years ago, um, the big box stores like your Lowe's, Home Depot, Walmart. You guys remember when they used to carry like, hey, go check the back, see me in the back. Yeah, we got it. Remember those days where they always had inventory in the back? Not no more. They realize it's just wasted costs, right? Because they got to keep all this extra stock. You got to think about it. They got like 1,000 stores throughout the United States. You got all this inventory sitting on shelves. That's a lot of money tied up. So what they do now, they keep very minimal inventory on hand. And now if you go to Lowe's, I know for sure if that store doesn't have it, they'll get it from another store and have it shipped, have it brought over to that store. They might ship it to your house. So that's some of the ways companies are kind of like, basically they put in money where they can use where it's more beneficiary for them. So money in the inventory is not going to benefit me if I can put it in the stock market in a mutual fund, right, and make money off of it. Um, I don't know. I was in Texas when a while back when a hurricane was supposed to hit us, not Katrina. I think I was in Texas, and we had a threat of a hurricane. And obviously, you guys know what happens, right? All the shelves are empty, right? So a grocery store only keeps like 3 days worth of food on hand. So just imagine if everybody goes to the grocery store right now, that's why they're just so empty. Even with COVID hit last year, you guys noticed the grocery stores were struggling to catch up because there's just not enough inventory on hand to stay ahead. So same thing with your business, you have to manage that, and you don't want to be too much inventory on hand. And then let's say like you go under, let's say you decide to close your business up. Now you got to sell this inventory off, right, to make some of your money back, or you got to give it away. So just stuff like that. Liabilities obviously is anybody you owe money to, bank loans, um, credit accounts, and equity is money that, like for me, be money that I put into my business. And you'll see a lot of times owners, if you're an L.O.C. or you can see take money out of your business, that's not a problem. Just record it on your books. But what the balance sheet will do, if you go to sell your business after they run the numbers and close out, get away certain asset, you can kind of like see the true value of your business. Um, Cash flow, like I said, you can track that on an Excel spreadsheet. You can almost do it. People like to do a cash flow. You hear people talk about, hey, I want to do a cash flow for the next 4 weeks, right? And so what they're doing, they might just get an Excel spreadsheet, right? And then you go from Monday to Sunday or Sunday to Saturday, however you want to do it. You might just do Monday to Fridays. And then you'll say, okay, week 1, we have this much money coming in. I know I sold 20 cakes last week. They're going to pay me this week. So I got, say like $20 worth of cakes coming in. Well, $100 worth of cakes coming in on week 1. So then you just repeat the process. Well, how much? Week 2, I got $300 worth of money coming in. Week 4, just go do it like that. And then your expenses the same way. Okay, week 1, we know we got to pay rent. Okay, we know all the utilities are due. Maybe every week you might do grocery shopping. So then you can kind of lay your expenses out, and then you can, at the bottom of each week, you can see what your cash flow ends up being for that week. And obviously you want to be positive whenever possible. And it's possible you might have a negative week, and there it happens. Things happen, right? So that's a easy thing for anybody starting out. You can kind of track your expenses. Um, just remember, cash flow is 3 areas: operating, investing, and financing. And like I said, operating is your day-to-day activities. Investing is you investing into yourself, such as equipment or inventory, house, or I shouldn't say a house, should say like a building or something. So stuff like that. And then financing is banks and stuff. And remember, there's also angel investors. I mean, there's all kinds of people out there financing nowadays. There's just so many avenues out there. I know it's sounds easy, but it could be challenging at the same time. On taxes, I had obviously your Schedule C. If you're a partnership, then you guys be looking at a K1 1065 and an AZ 165. But I think most likely in this, for this particular class, mostly everybody's looking at a Schedule C, and then obviously you'll have like just the basic expenses. You'll have like you might have some meal costs. Remember, if you go out and meet a potential client or potential customer, and you buy them lunch, just note it on that receipt, and you can deduct up to 50% of that off. Or if you're working out in the field and you buy yourself something to eat, that's a business expense. Just write it on the receipt. Those add up really, really, really regularly. Obviously, the vehicle expenses that you can, not the expenses, but the mileage rather. Just remember the day you put your vehicle in service, and then just have a log, the starting number, the ending total miles, or I just write how many miles I did. It could be round trip too. So I have clients I go see out of town, so I'll do those. I'll record those mileage if I drive. If you have to fly, travel, those can be considered business expenses. Obviously, if it's for the business. I know a lot of times people in the fashion business out here in Arizona, they go out to California a lot. I think they go to the alley, I believe, and they'll get merchandise out there. It's cheaper. But if you do that, and that's when that next section will come into play, sales tax. But before I go back to that, but just it's okay to do business across states, but there are some things you have to look out for. Nexus come into play, and what that is, out of state sales. And a lot of times you have to ask yourself if your business has a presence in that state. If you do, then most likely you have to pay sales tax in that state, and then you have to get registered in that state. So if you think about the bigger companies, I knew a guy that worked for a golf company here that built golf clubs, and they in all 50 states. And he said, yeah, we got to do TPTs in all 50 states. So you got a team of people doing it. And just imagine that's every month because their sales are so high. But a lot of times when you do sales tax and starting out, you can file like a zero return, but you have to file something, right? If not, City of Phoenix will hit you with that penalty sometimes. But if your sales are low enough, then they'll let you file like a quarterly return. Then you just file it quarterly. Or sometimes if your sales are really low, you can file it annually and not have to worry about it, just do it once a year. But you will have to register every year and pay like the fee. And I think Phoenix is $50, I believe. I could be wrong, but some of the other cities around here. So if I'm in Phoenix and I have sales in Scottsdale, Glendale, Chandler, I got to pay. If I make a sale to somebody in that city, I got to collect sales tax and then file a return with that city. I don't know if you guys recall, about 5 years ago now, or 6 years ago, about 4 years ago, the state took over. Man, I don't remember now. You just filed one return with the state of Arizona, And now Arizona sends the cities their money, which is pretty cool. But the cities didn't like that, right? Because they're like, we want our money now, and then we got to wait on the states. But I guess so far so good. I haven't heard any complaints. But that's some of the things to look out for. And then some states, I know, like with the Nexus, they be like, I think Kentucky's like, hey, once you have over 200 cells in our state, you're required to pay sales tax. But I had to look that up for a customer a while back, but that can change. That could have changed now. I haven't looked at it in a while, but just stuff like that you have to know. But obviously, when you do that, then on the Arizona state tax form, you'll put that credit in there where you're not that way you're not double paying taxes. So either you're gonna pay it in Arizona or you pay it out of state. So that's how that pretty works. Any questions on that?
Yeah. Going back, would you recommend a CPA or for someone, you know, with a business my size? Would you recommend? Because that's a lot, man. Because if I, you know, my business is more like visual, so it's content.
Yep.
And,
Yeah. So what I would do, the difference between a CPA and like me, remember I said I had my master's, a CPA can audit. So I'm not allowed to officially audit based on that tax laws. And another thing, if you have a CPA, they cannot be involved with your day-to-day operations. So, and they probably most likely won't be involved with their day-to-day operations because they're CPA, they make more money doing the audits. So I had a lady reach out to me on LinkedIn one time. This is a true story. And she asked me that. She said, hey, can you help me out? And then she said, I need a CPA. And of course, you know, I replied back to her and I told her that. And then she said, you know what? I think you're the person I'm looking for. So even some of my clients that I took over 3 years ago on their books, they had a CPA and their books were just too much in it, right? Because they might have, so it's like, remember I was talking about, I'll give you an example. So like your revenue account, money coming in, you might have cakes sold, cookies sold in this account. So all your money coming in, go to this account. This is my cakes bucket. And over here, this is my cookie bucket. And then over here, this is my cupcake buckets. So that's 3 different general ledger accounts, right? So this particular client had over 400 general ledger accounts. And I was like, how come the CPA don't tell them nothing? And I said, they can't. Their job is to audit. They can't tell you, they cannot advise you on certain things if they're your auditor. So I always tell people that just be careful. It's good to have 2. You can have somebody like me doing your books, and you can have a CPA if you were like, especially for nonprofits, right? Because nonprofits have to get that letter signed off annually, right? But like I have several nonprofits I help. So, and then like we have a CPA sign off on them annually. So that's also possible. So there's ways around it where you can lower your costs. And one thing about me, if somebody calls me, really my heart's in it. Like I'll go out and talk to people, give them a lot of information up front, say, hey, this is what you should do. And it'd be like a complimentary, right? Because I have a good heart when I see small businesses coming up. Because I want you guys to succeed, anybody to succeed in their business. But right off the bat, you wouldn't need a CPA. You could really get just a bookkeeper if you had to. You can find local bookkeepers that can help you out easily. So that'll be my answer to your question.
Okay, yeah, my apologies, man. I missed the early part because my link wasn't working, so I wasn't.
Oh, that's fine.
So I missed your introduction, exactly what you do, per se. So, but yeah, thanks for that, man. I'm just looking for, you know, I just want to do it right. Once I'm finally able to, you know, start generating, I want to make sure I'm doing it right from the beginning.
So exactly.
Asking those questions, but
Yeah.
thanks. Appreciate it.
You're welcome. And like I said, just as long as you're tracking everything on some sort of Excel spreadsheet. And nowadays, honestly, with all the software out there, all the tax software out there, if you feel comfortable, you can probably do this is for anybody, obviously. You can do your own taxes. You know, it'll walk, a lot of software nowadays walk you right through it, basically. And
The only problem with that for me is knowing all the,
what's available out there for you, right?
yeah, like
Yeah.
what's the right one, and
Yeah.
then how do I know if I'm missing something that I could, have,
Yeah, exactly.
so I may be shortchanging myself. So for me
Yep.
personally, I wouldn't trust myself to do it. So I was going to ask if you had any apps or anything, or, what I'm saying, after the call, we could, have a confab a little later to talk
Yeah.
about offline. But,
Yeah, that's
I'm
fine.
looking for someone to kind of help me with that as well.
Okay. Yeah, we can talk offline, or I put my information on the screen somehow, some way. Like I always tell people, I don't know if you missed it earlier, like even if you went out and signed up for QuickBooks Cloud, it's a cloud based. And I always tell people, even with websites, if you build a website, just control your whatever you have, control it. That way, if you and your accountant or you and your marketing person fell out, you don't want them to control everything. Then all of a sudden they'd be like, oh, you want your domain name back? Give me $2,000, and you only pay $18 for it, right? So people are like that. Just kind of keep everything in your own accounts. If you as you grow, and even with accounting, right? If you, so like somebody hired me to be their accountant, I'll tell them straight up, hey, you keep control of this. You gotta know how to do this. So if we ever have a fallout, which can happen, right? You need to know how to take me off everything. That way you don't lose your information. Because I've seen things in the past where accountants, it takes their stuff from their clients, and then their clients can't get it, and then they'll say, hey, give me $2,000 if you want your stuff. So just kind of like protect yourself when you start to grow. I think I had one more slide actually. Let's go back over here, and then I'll ask more questions. So this is if you choose to go, I don't know if I'm supposed to admit people in the, I guess Cirilla's doing that, letting people into the meeting, into the presentation. So this is at the day of meeting, if you were to meet it with a financial advisor or bank, this is just kind of like have your current business information. So all it is, have your current financial statements, right? Your P&L, your balance sheet, your cash flow. And like I said, they're going to really pay a lot of attention to your cash flow and your balance sheet, because that really tells you, that's really the true business right there. But remember, your cash flow, there's three areas in your cash flow: operating, investing, and financing. That obviously, choose a bank that specializes in your business needs. So not all banks want to give out construction loans, right? Not all banks want to cater to small businesses. Just keep an eye out for that. I put in here, have up to 3 years of tax returns. I think if you do 2, you should be fine, or even just having 1, you should be fine, but just be prepared. There's that current assets. Remember, assets with known balances. So you have like your bank accounts. Know your balances. If you don't one bank account, so well, I got $20,000 in equipment that I own, paid in full, right? That's important. You list all your assets, because even though you may not have a large bank account balance, if they see that you have a large asset balance, they might be more willing to give a loan, or they'd be impressed that you know what you have. I should have put on there, know your current liabilities as well. So, but really that'd be on your current business information. If you are successful with a banker, get to know the bankers. It's okay to have small talk with your banker. One of my jobs that I work with, we build houses up north in Prescott, and I guarantee our owner, they were always on the golf course with the bankers, so doing business deals, right? So I think that's where they get that from. Get to know your banker. And obviously it's okay to have multiple banking relationships, which I have seen many times in a business. So that's just some of the key things to take away if you were to go that route. And sometimes you don't have to go that route. You can build a business up, and then eventually you get to a certain level, then you want to go that route. So you don't have to go this route right away. You can always build a base up. Just like the people, if you think about, look at people on Shark Tank. They've been in business for a year or 2 years, and they got revenue coming in. That's the same thing they're doing. They presenting their financial, their plan to sharks, and then hoping that they'll bite. So, but they didn't go up there day one. They probably would laugh at them, right? So it's okay to go soon, or you can wait to go up to a bank. So really based on your needs. I think, let's see here. Oh, that's all I had. So I can go back. If you need me to look at a different slide, I can go back if you need me to, or you had questions, fire away.
Yeah, to be transparent, it'll take a while. I'm probably about a year away, maybe, from going to a bank.
Okay.
So I just want to make sure that my personal income, my personal stuff is tight in case
Yep.
they do that. So that's what I'm working on now, as well as creating. So thanks, man. I appreciate it.
Okay.
Question right now, but I wanted to check in with Saria since we're at the question point. I'm assuming we don't need to take a break, right?
I don't think so. I think we can go ahead and go right into Q&A and kind of wrap this workshop up. But I do have a question for Gus on applications, on how to track your finances when you first start out.
Mm-hmm.
How important is that? Because I know some companies that I work with and I help mentor, and they're right now in the world hurt because they didn't track their expenses. You know, they've been in business for about 5 years,
Yeah.
right? And now they're trying to get a loan, and they're asking for taxes, right?
Mm-hmm.
And financial statements, and they were like, well, we started out, we wasn't paper, we just got QuickBooks.
Exactly.
So, how important is it to track your expenses and all that stuff we talk about in cash flow while you're a startup?
Yeah. And one thing I would say to that, the IRS is like this. If you find $20 on the ground, you're supposed to record it to the IRS as income. So with anybody starting a business, if you think you might, once you know it's not a hobby, you got to start tracking. There's just no way around it, because then what happens if it blows up? In that case, then you're working backwards, right? You're trying to figure out, oh, what did we really bring in? How much money did we really make? And now, you don't want to chatter too much. Now you got the IRS knocking on your door, right? Especially if you send in a tax return and all of a sudden you went from $50,000 in regular income, then you got $500,000 in income. They're like, hey, wait, we didn't see this coming, right? So you really want to start off the right way. And I know it's challenging at first, because a lot of times when we start out, we're like, oh, it's nothing, just $20 here, it's just $10 here. And then next thing you know, it can add up quickly. And you'd be surprised how much you spend on a business in the first year and you don't realize. And like I said, if you don't have any revenue in that year, you can always do a carry forward if you have to. So that way, when revenue does start coming in, you can still make that deductions on your tax return. So there's a lot of stuff out there for small businesses the IRS is not evil people. They do really try to help you and put things that helps the small business out. So, but to answer your question, it's very important just to start tracking everything from the get-go. Even the mileage. I know it's hard because it's hard to write, I went and saw this client today. Oh, let me put those mileage down. Every little bit adds up. Every little bit's going to help you save your tax return. I know there's my information in the chat. If anybody wants it, just take a screenshot of it. Email me if you want to, and then I can always answer questions offline. I don't mind, but hopefully that answers your question.
Yeah, it does.
Gus, I wanted to ask you what you thought about Wave accounting. If you're familiar with it, I think it's similar to QuickBooks. It's a free online program. I want to get your take on it.
What's it called? Wave?
Wave accounting.
I never heard of it. I heard of Patriot accounting, but like I said, there's so many out there now.
Gotcha.
If you can find anything that they got 300. It's out of Canada, so QuickBooks is the standard, but now, like I said, there's a lot of competition out there that can just take away from QuickBooks. Yeah, and they even have an app just like QuickBooks. It looks like a Canadian version of QuickBooks, actually. It looks pretty promising. I wonder what they. I'll have to see what they specialize in. I like QuickBooks because I've been around it so long. Even now, even in the construction field, we were a small organization. We got it to work, but eventually we switched over to a construction software to do everything for us. But then again, as your business needs change, it's okay to change softwares too. So it looks like a good software. I actually liked it. It looks pretty promising. I might have to just check it out. But I like QuickBooks. Like when my customers get QuickBooks, they can add me on and it shows up in my queue, which is pretty cool. And
Yeah.
then QuickBooks have like a accounting software, and I use ProConnect. So now those are interchangeable. So now if I have a client on the QuickBooks side, I can pull the information on the ProConnect side and do their tax return a lot quicker.
Gotcha. And then have you, oh, I'm sure you're familiar with, can I get your take on the profit first methodology?
Which one?
Profit first?
Oh yeah, when people talk about make profit first and then worry about everything else later.
Yeah.
Yeah. Yeah, I'm like, for me, I always put people first, my clients first, and then like if it's a restaurant or anything, I try to look at like the cost. So anything like that, I try to look at the cost of everything. How much is the true cost of this? And then I try to put my profit, base my revenue on that. But what you could do on profit, you can say, hey, in 2 years, I want to be at this much in profits, right? So then you have to work backwards. So now if you want your profits to be like $10,000, how much revenue do you have to do to make a profit of $10,000? Or how much costs, how much, based on your revenue and your projections, then you got to factor in, like if you're doing a bakery, then you got to factor in how much I need to spend on food and how much, then you really break it down, right? You could buy, remember you could buy the high end flour, you can buy the low end flour, right? Then you start being picky like that, right? Even with the restaurant business, we always had price wars, right? With the different food providers, right? We had Cisco, and then we had US Food, right? So Cisco might say, hey, you can buy our hamburger patties, we'll sell them to you for 25 cents a patty. Then US Food might come back, hey, buy our patties, we'll sell them to you for 20 cents a patty, right? So you're always trying to do stuff that can help your profits. So I think if you take that route, you should be fine.
Gotcha. Thank you. I got a whole bunch of questions, but I want to make sure I'm not hogging up the time, because it's really timely, because I'm just now taking over a lot of the the financial responsibilities for one of the businesses I'm a part of. So I'm like, I got to do a P&L, I got to do a balance sheet, I got to do all that stuff. So this is like right on time.
Yeah, fun stuff. And then like what I would look at first, that if you just now taking it over, I would run your reports, right? If it's this year, or if you want to look at last year's only, just run those numbers and see where most of their money went. And then maybe something that stand out, and then you can drill down on it and see what they actually spend money on. I do it all the time, and if something don't look right, man, why is this bucket so high, right? And then you can see what's going on. Then you can pull up the current year, and you can see if it's better or worse. So it's just stuff like that.
Yeah. I'm definitely excited to dig into it, but it's like it's something I haven't done in a long time. So
that's fine. Yep.
Yeah. And do you still do like bookkeeping and accounting services? Do you offer those services? Okay.
I sure do.
I'm gonna definitely reach out to you.
Yeah. I appreciate that. Yeah, like I said, my information is in the chat, so you might want to reach out or anything. It's in there.
Okay, cool.
Yeah.
Oh, perfect. Yep.
Now too. I'll be reaching out as well.
All right. I appreciate it. Anybody else have any questions? Any questions in the chat? Nope.
Yeah, feel free if you have questions and aren't in a place where you can speak, you can throw them in the chat. Brother Gus's info is in here, so you can always follow up afterwards. Feel free to.
Yeah. Hey, one thing I do want to say, a lot of people don't think about it. Like if you're a nonprofit or a business, throw some of your money in the stock market. Get some mutual funds, get something safe. That way, I have a nonprofit now. They put some money in an E-Trade account. And it's just, we don't think about stuff like that, right? So whatever you can do to help make your business profitable, and then like let's say if you went and apply for a loan and you show like an E-Trade account on your balance, on your financial with the banker, hey, I got 100,000 sitting over this account, right? Or or just $10,000. So they see that, oh, you know what, you got your financials in line. Just anything that can help that they will be shocked. Even $1,000. We got this savings account over here that we don't touch. Just stuff like that. So just think outside the box.
Yeah, I'm glad you brought that up, man, because I was going to ask if I just got a Webull account. I just got a Webull. Yeah, and I was going to attach my business account to it.
Yeah.
I was like, should I do that? But then I'm like, well, why not? Because I know the little bit that I do know about, how businesses are financed. Some of it is investing.
Right.
So, I was wondering if that was a good thing, but you just confirmed that it's all right to do that. Just so, and the other, I did have a question is, I guess I wouldn't say I didn't make any money. I guess like now that I'm listening, I didn't track what I did, what I did make. Because I did make some, because I also wrote a book, and I made sales on Amazon, and I made sales at the bookstore, and then things like that. So is a bank, would my bank statements be good enough at this point to show some kind of income?
Yeah, because all that money from the different media platforms flow into your bank account, right? I'm assuming.
Right.
So basically, if your whole, let's say you're using QuickBooks or Wave, like you stated, let's say it crashes, and then even to IRS, if you go to IRS call, you say, hey, bring us your financials, and then you go, oh, I shared everything, and the next thing they're gonna do, well, we want your bank statements, right? And then you can't get away from that, because then they just go down to the bank and pull them for you, right? So, bank statement is key. And the only thing we're doing with our software program is just kind of like organize it where we spend, what buckets they go to. Yeah. Hey, I do want to mention this. I'm real I used to be a lot into marketing, but but there's a new app called ArcNet. I put it in the chat. There's an ArcNet app that's coming out. It's like in development stage. But what this app does, you can upload 3D objects. So if you sell clothes, you sell books, you sell jewelry, you can upload your business in there. It's privacy first. It's like one app all in one social platform all in one. And over the next 6 months to a year, you're going to start seeing a lot more with this. So not to get off subject from the financials, but I don't know if you guys heard about Apple glasses coming out in the next 2 years or so. So you can wear these glasses, and then instead of going into the malls and everything and see what they're special, you have these glasses on. And then you guys remember Mission Impossible when Tom Cruise moving that stuff around in the air? That's what these glasses are before. So it's like new technology coming out. I think you'll start seeing more of this in the next year and a half or so. So right now, ArtNet is the platform that's like pushing this. And I really believe that this is where everything's going. But the reason I brought that up, because you can put your business on there and it's pretty free. Their thing is cut out all the big fees at Amazon, eBay, who else is that? All Square, they take a lot of fees, right? So their thing is one flat fee. And then like me as a shopper, I can load one credit card in this app and purchase and buy anything from any store in an app. So it's pretty neat if you guys ever check it out, especially if you got small businesses.
Wow. Does that work for video content as well?
Yeah, they have video content come, and I'm an investor with them, so I do a lot in the stock market.
Yeah, you sounded like an investor. I was going to ask if you was an investor.
And they do their I don't want to get off subject, but their ticket symbol is TTCM. So right now it's like a penny a share. So, but I tell everybody, this is like the Apple phone when it came out. My brother told me about the iPhone when it came out, and I laughed at him. And I said, you know what? I'm not going to miss this opportunity again.
Really?
I kid you not. I knew about the iPhone when it first came out, before it even hit. My brother was working at Apple, and we laughed at him. We like, nobody wants cell phones. Why everybody wants cell phones for? I'll never forget that. So, true story. So that's what's coming out now. This next layer. I mean, you're gonna see Apple glasses everywhere. I mean, Google. Everybody's fighting for this right now behind the scenes. So it's if you got time tonight, tomorrow, just look it up. You're gonna be amazed with everything that's coming out. It's unbelievable. And
Thank you for the tip.
yeah, and they're gonna have like a teleport. See how we meeting now? Eventually, we'll be able to teleport into a one conference room, and it's like we everybody's in the one room. So all that stuff is coming. You know,
Holograms and
yeah,
stuff.
all that stuff is coming. It's gonna
Wow.
be crazy. So, but
That's
yeah,
true. That kind of sounds like an NFT, not to stay off subject, but it kind of sounds like an NFT when you're talking about having the business on there, and you can upload images, or can you actually upload a 3D image of
yes, they have
what?
all that coming. And you know what's funny? They own the NFT patents that nobody knew about. They got the first patent back in 2013. So there's a lot going on. I mean, it's too much
Yeah,
off
yeah.
subject, but I can tell you guys a lot. Y'all be shocked, and then y'all be running to buy that stock too. So
Hey, as long as the feds ain't knocking on my door for insider trading, I'm good.
yeah,
For real.
Yes, one more quick question. I've heard different schools of thought on this. What is the best way to evaluate a business?
yeah. The best way to look at their books. So, so if you have, I want to say this. Okay, let's look at it like a house. If in my house, let's say I can't value it. You know, like you call like a appraiser to come out, right?
Yeah.
What they do, they look at everything in your business, right? So they look at the windows. How good are your windows? How good are your roofs? So now you look at your business like that. Somebody come out and look at your business. Okay, you own the building. Okay, you own the land. Okay, good. You have all this equipment in your building, right? One thing that comes to mind, I don't know if you guys ever go to Crumbler. If you go to a Crumbler cookie store, you go in there, it's like empty, right? They have like maybe 3 or 4 ovens. They have like mixers and no overhead. If you think about it, for a restaurant that sells cookies, there's like no overhead, right? If you think about it, if you think about your average restaurant, and I actually looked into that, how much was it to become a franchise? It's like just under $400,000, and it was very tempting to, but I had to relocate. And I was trying to get my brothers involved, but they said no. But that's kind of like how they value your business, and then they look at all your assets, all the stuff you own. That's how you have cars in your business name, right? That's how you have the stock account in your business name. So now let's say like they do all that and it's worth $1 million. So now they say, okay, who all do you owe money to? And let's say you list 5 different people, it comes to $500,000. So now they do the difference. And then you say, okay, your business is valued at $500,000. And then they might say, well, you bring in $20 million a year, right? You bring in revenue every year. Then they might factor that in, and then they might say, we'll buy your business for like, remember we said $500,000. Then they might say, hey, we'll buy your business for $5 million, right? So then, because they value like the customers coming in, all those customers. Let's say you have a customer database of like 500,000 people. That's value, because they can take those customers and then sell stuff to them in their business. So anything you have, those like even tangible assets, right? Stuff you can't see, like your logo, which is patent. Everybody knows your logo. People fly to your logo, right? So all that stuff is value that you may not see it, but then they consider all that to get and to arrive at a valuation for your business.
Thank you very much. No, that makes a lot of sense.
I have one more question. This is Surya. How important is it to have all your paperwork together for your tax return?
Oh, very important. Like when people, like I tell people when they bring me their tax returns for a business, I said, I just need totals. I don't need the breakdown. Just send me totals, because in reality, if the IRS comes, they come knocking on your door, not my door, right? So if you have documentation of back of your totals, you are good, right? It's legit. So as long as people have totals, if you have if somebody come to me and they don't have totals, I have to add everything up, which happens. Then obviously you have to charge them more money, but you try to avoid that. But then again, if they don't have totals, that means they're not really monitoring their financials, right? If they don't have nothing, they just bring you bank statements or something. So stuff like that. So they should have totals throughout for their accountant or when they do their taxes when they present their taxes to somebody.
That's where you can save some money.
Yeah.
You can give them your P&L and say, here you go, your
Yep.
totals.
Yeah, exactly.
Yeah.
So,
Just downloaded the app.
yeah, exactly. I just from my experience, running the business, it gets expensive, when you're trying to get your taxes done, but everybody else is trying to get their taxes done too. So, it's not uncommon for people or for someone to, charge you $1,000, $1,200 to prepare your business taxes.
Yeah, it's
So,
not. Yep.
Would it be easier to have, is there an app? Well, let me ask this, since I haven't seen the QuickBooks app
There
or,
is.
or software. Okay, so there is,
Yeah.
is built in that QuickBooks app, because I'm trying to limit the amount of apps I have on my phone. Is there, built into the QuickBooks, is there a payroll option in there, so that money, so the taxes are already deducted for the state and things like that? So so if I pay myself into my personal account out of my business account through my payroll account, does QuickBooks have that feature where I can do it through that, so I don't have a separate payroll app?
Right, but unfortunately, being that it's just you're not allowed to do that. So it'd just be like an owner's withdrawal from your business, because no matter what, everything flows down to your personal tax return. Now, if the minute you get employees, then yes, you can have an add-on to QuickBooks to do your payroll, and it'll take out the taxes for you automatically and does all that for you for additional service, and then it'll create the W-2 forms at the end of the year for you, and then file that with the IRS as well. Yep. So it is available. Yep.
Okay. I'll just wait. I'm just impulsive. Needed to know that. I needed to know that. Thank you.
Take the money you pay yourself and put it in the stock market, right?
Absolutely. Absolutely. I just looked at my ether. It's doing pretty good. Yeah. Yeah.
That's good.
Cool.
Okay, any other questions? If there aren't any others, what's that? Since your crypto?
ArcNet.
Oh, gotcha. Yeah. I already wrote it down. TTCM. I wrote that down too.
Yeah.
Everybody trying to make money today, tonight.
Right. By any means necessary.
Now is the time.
Right. But we definitely appreciate you sharing all the game with us, all of the knowledge and insight with us, and appreciate you sharing your contact info. And we definitely hope that people take advantage and take you up on your offer for any follow-up info, consultations and services. And we urge everybody who definitely needs it, which we all do, to take advantage and reach out to brother for support and for help. And managing your finances, because it's something that's so critical. We can't understate how important it is to know our numbers and to be really adept at this if we're really in business, right? Brother said if we're going from side hustle to real business, it's important to know these things. So I've thoroughly enjoyed the class. I got a lot from it, and hopefully everyone has. And again, thank you again, Brother Gus.
Thank you. Appreciate it.
Thank you, brother.
Yeah,
of course. And so everybody can have a little bit of extra time back tonight. So enjoy yourselves, enjoy your families, and we'll see you in the very next class.
Oh, Ali, we got one more thing. We got a poll.
Oh, the poll, right?
Yeah.
I'm sorry.
Okay.
Yep. So, so we'll be doing a poll. Go ahead.
Good. So
please take a moment to.
Yeah, go ahead. I'm sorry.
Go ahead, Surya. Go ahead.
Just tell how we're doing for this webinar, how, if all the information that you received was good, if you can just let us know how we're done, and so we can make these webinars better. And I'll just leave it up for a couple of seconds. Go ahead. I'll turn it back over to you, Ali.
Yeah. As you're filling out, if any questions are popping up, feel free. drop those in last minute.
Okay, I'm gonna go ahead and end the poll
All right.
and send it back to you, Ali.
All right. Well, yes, if there are no other questions, comments, or anything like that, then we will see you at the very next class. I apologize for everybody that came on late. If the delay was due to the Zoom link, I will make sure that we have the correct Zoom link in the. Hey, brother. All right, I'm trying. I will make sure that we have the correct
No,
correct Zoom
20
link.
minutes, I was like, yo, what's
Man,
up?
I'm so used to L.O.C stuff. We use the same Zoom link for every single meeting.
Yeah, I know.
So I just made an assumption that it was wrong.
It's at April 29th.
I'll make sure that we have the accurate Zoom link in the next calendar invite. And but yeah, thank everybody. Thank you, Saria. Thank you, Gus. Thank you, Jackie.
Thank you.
If there's nothing else, then everybody have a good night.
All right, bye-bye.
All right. Have a good night.
All right, see ya.